today I'll be talking about the closed trades for the second week of December, covering December 3rd to December 9. I'm going to quickly go through our disclaimer. So we're not a registered CTA. We are a third-party trading system developer. Just remember, trading futures and options involves substantial risk of loss. It's definitely not appropriate for all investors. And lastly, past performance is not indicative of future performance. So I'm going to be talking about kind of live trades in this blog. So just remember that past performance is not indicative of future performance. Okay, let me get on to the kind of summary of how we did for the week. Alright, so here's a summary of how the Crusher did. Overall it was down about 2K, which is about 7%, and that's per 30K traded. We did have a few good trades, but unfortunately the covered call and the iron condor is the one that kind of hit us the most. But let me go to the chart here and I'll kind of walk you through. So this is a chart of my TradeStation platform. Up here is the momentum algorithm plus the covered calls. This is the 10-year note algorithm. This one here is the morning gap day trade algorithm. This one is the breakout day trade algorithm. This one is the breakdown short algorithm. And then this one here is the iron condor. But I want to talk about probably the good first. So in this week, here's kind of so we're covering, December 2nd, December 5th until December 12th. And so we did have a few good trades on the momentum algorithm. We came into the week long, and if you watched the previous blog, you saw that we went long right back here. Well, the markets did rally, and we hit our target on the 7th of December. And then we jumped right back in on that same day towards the close, and then we got out of that trade on Friday. So we had two positive trades on this algorithm. The 10-year note algorithm right here also it did well in that we did not have a trade. So anytime the market the 10-year is going lower, we consider that a win if we're not in the trade. It's really been selling off for well over a month now, and I think if this 10-year stabilizes a little bit more, we could definitely jump back into this trade. The morning gap algorithm took a few losses. They weren't horrible though, so we went short on the 5th and got out at the close that same day, and went short on the 6th again and got out with a loss on the 6th. So it had a few losing trades, which didn't help. This one here is the breakout day trade. It also had a trade on the 5th, and that trade, so we went long on the 5th, and then we got out at the close for pretty much a break-even trade. And then the last one is the short algorithm, and it did not have any trades in this week. That's throughout here you don't see any trades, and so that's good. So that's some of the good. Probably the algorithm that hurt us the most though is the iron condor, and also the covered calls element of the momentum algorithm. So we unfortunately on the 6th of December we placed an iron condor trade with a call at 22.10 and 21.95 as a put. And after we got into that trade, the market took off, and in particular on Wednesday it had a pretty huge rally. And so we just got a little bit unlucky in that normally if you have a day like this where the market goes high like it did here, the majority of the time that starts with a gap up, and this day though it didn't, and it actually started with a small gap down, and then the market really took off kind of midday. That's kind of a rare pattern to see, but it did happen. But the reason why we consider that to be unlucky is because usually when you have a day like this, our breakout algorithm will jump in and it'll have gains throughout this. But since it did not jump in, we really didn't have anything covering us, and so as the market went higher, our calls increased in value and we were short the calls, and so that was not good. The puts, of course, they did expire worthless, so that helped. And I also want to comment that our protection actually helped shield us from some of the losses that we would have seen here. So our long calls were actually profitable. So that's kind of the iron condor. The covered call had a similar issue where we sold the calls, and then on Wednesday the market took off quite a bit, and that's when we took the majority of the losses. and then it really just kept going higher. And so for part of this move higher on the calls, they were covered, but in a portion of this move on Wednesday they weren't. So that kind of summarizes the chart view of how we did. Let me go back to this slide now. Okay, so as I mentioned, we had a few good swing trades. Those are these ones that you see right here. We made $1,000 on one of them and about $813 on the other. But then the short calls, we lost about $2K on each of those. So these gains helped offset the losses that we would have seen here. Now also, this negative 2104 does not include the gain from the protection. So the protection made this final profit loss a little bit lower. But overall, that's kind of how we did. There's the two day trades that took losses, and so this is how the Crusher did. We were down about 2K on a $30,000 account. That's about a 7% loss. If you go to the ESTY futures, it did a little bit better, mainly because it didn't have the Iron Condor trade, and so its losses were about 922 per 20K, and that's about a 4.5% loss. And if you go to the Iron Condor, then here's the Iron Condor. So again, you see the negative 2,000, but that's offset by the protection to where the final profit or final loss was about 1,200. On a 10K account, that's about 12%. And keep in mind that the 10K account is a very aggressive allocation. Most people do 1 per 20K, and so on a 20K account, of course, as a percentage, that's cut in half. The last one was the day trader, similar thing where this is an aggressive allocation of 1 unit per 10,000, and because of the two gap shorts, it took a loss of about 597. So that kind of summarizes. Oh, I guess the Bearish Trader, because the market rallied so much, we never expect this algorithm to do good if the market's going higher, especially the way it did, and so it did take a pretty big loss of about 2,400. But that kind of summarizes the week, so feel free to give us a call, email us if you'd like to see a demo. And just want to highlight that even though we took losses this week, that's part of the system. We don't guarantee that we make money every month. We do have weeks that were similar to this one where we'll take a few losses, but the idea is that hopefully those losses are very minimum compared to the gains that we see in the previous weeks. And we do like to look at things on a monthly basis, but the weekly blog is done per week, and so we wanted to show you how we did this week. But overall, we're not rattled at all. I mean, the algorithms took some losses, and that can happen on special weeks, in particular this week where you have a really big rally kind of that starts midday, as it did on Wednesday, and is kind of atypical, where instead of basically our breakout algorithm didn't trigger to help capture that, and because of that it was some losses, but fortunately those days don't happen very often. Again, usually it's a big gap up followed by a big move, and our breakout is in that trade to help offset, to have some gains on those days. But in this case, it is what it is, and overall we're real pleased with the algorithms. Though we trade 7 of them. They're all independent of one another, and they trade on the E-mini S&Ps and the 10-year note. Again, the highlight of the week was the momentum algorithm did amazing, as you can see here. It caught two good winning trades. The other highlight, even though it's kind of a weird highlight, is that we've been able to stay on the sideline on our 10-year note algorithm as it's been going lower. So it's doing the right thing. And once this market stabilizes some, we'll jump back in. And if the market pulls back and the 10-year goes higher, then we'll for sure hopefully be in that trade. But I think that summarizes it. So thanks for following along, and give us a call, shoot us an email. Be happy to give you a live demo of the platform. And just remember, trading futures and options involves substantial risk of loss. It's not for everyone. And consult with a registered CTA if you want to talk to someone about your unique situation to see if these algorithms could be something that would fit into your investment strategy. So have a great day, and we'll talk to you later. Bye-bye.